Welcome to Turbo Money Fam.
First and foremost, like with anything, educate yourself. Start by learning the fundamentals of options trading through books, online courses, or tutorials to understand the terminology, strategies, and risks involved. Paper trading. Practice trading options without risking real money by using a paper trading account or a simulator. That way you could see if your strategies are working or if your predictions are coming true, if you're being correct more often than not. And then when you start using real money, you'll have that emotional connection and it'll be a different ride, but at least you'll know if you're accurate or not with the paper trading before risking real money. This will help you gain experience and test your strategies before investing your $500, because if you don't want to keep depositing more money and you want to build a $500 account, you need to be, you could be wrong, but I had to know when to risk management, cut losses. Well, we'll get to that. I'm rambling, but I'm excited. Set clear goals. Define your investment goals and risk tolerance. So if you wanna only make 10 to 50% on each options trade instead of going for these 400, 500% gainers every single time, and all these OTM calls, if you stack 20% wins consistently, 20% of a $2,000 trade is $200. So once you get up there to the bigger numbers, it starts making sense. Determine if you're looking for short-term gains or long-term investments, or a combination of both. So, if you're, have a vision of a stock, you could own shares of it, and then also you could be selling covered calls, which is like selling the premium, or you could be buying a long call thing that's going to go up to make money on buying calls while also owning shares. So even if you get out taking profit, you think early because it keeps running, then you're still getting the upside. Choose a reliable broker. Research and select a reputable options trading broker that offers low-cost trades, user-friendly platforms, and educational resources suitable for beginners. So really simple. Obviously, you probably heard Robinhood. Link down below for my affiliate link. I appreciate you. I love you, Turbo Money Fam. And it's the simplest UI, and they've been making improvements. And I think they're dedicated to staying true after all the lawsuits, and now the economy's ready to blow. So hit the link below. But first, paper trade, but when you're ready. Start small with your $500. Begin by making small trades and avoid putting all your capital into a single trade when you open your account, because you want to build on this $500 and the gains and compound it. 20%, gain 20% on each trade, like I said, or 10 to 50%. That's sort of been my strategy that's been working, and obviously you're going to develop your own or try it. Just stack it. Even if you get out of a trade too early, it could have always reversed. It's better to just take profit, and then you see that you don't want to chase back in and then give your profits up when it hits that reversal just after you start coming back in. So I'll get to it in another point. Start with a limited number of contracts and gradually increase your position as you gain confidence. So start with one contract for, between maybe $75 to $150, and try to get a little gain, a $50 gain, and then do like a $150 contract again, a $200 one, get a little 25-50% gain. And if your losses, if you're confident in the way it's going to go, you can hold. But also if you want to be like, okay, once an option gets down 25%, like you'll cut losses. And just trying to minimize the losses and then just keep stacking the wins, because just like with anything, consistent small wins will always be the way. Focus on basic strategies with straightforward options strategy, like buying calls, puts, and later explore more complex ones like I said, selling covered calls or spreads or whatever. But with the simple bread and butter, you can do just fine of buying and selling these contracts if you make the correct prediction of which way a stock's going to go. And timing is everything. So again, just study. You'll see if your predictions are starting to be true, and and lock it in. Let's go, Turbo Money fam. Avoid complex option strategies initially, as they often carry higher risks. Like when you buy a call option, it's like you can only lose the premium amount. If you buy an $80 call, the most you can lose is $80. But I mean, hey, if it has a Shrek open with the green D going right up, you know what I'm saying? Then you know you're gonna get a big gain, unlimited gains, and you could have one of those big gainers. But again, that will happen, but that's not the goal of every trade. And obviously I've learned that the hard way, losing thousands of dollars. So I'm on this journey as well of starting a $500 account and trying to build it up. Risk management. Always have a clear management plan in place. Like I said, if you're looking at some type of levels, if you're looking at the relative strength index, like the MACD, some technical indicators, the due diligence that you've done that you think is going to do that. If you're like, okay, if it breaks through, if it's not doing what I predicted, I'm going to stop, reassess, take a little loss to then recoup into the next play that, so you could have a couple losses before you have a big, nice hit. And you're able to do that by not just going crazy on every trade. Set stop loss orders to limit potential losses and avoid chasing losses by sticking to your predetermined plan. Just know what your plan is. If it doesn't go according to that, cut it. We're trying to make something out of this $500 and not just lose it all in one trade and then just blow up the account. Research and analysis. Conduct thorough research on the underlying asset you plan to trade options on. So if earnings are coming up, being aware of macroeconomic conditions like the Fed raising interest rates or pausing interest rates, just certain policies, what's going on in politics that's affecting financial assets and products. So there's just so many things to pay attention to. But if you're focused specifically on the news around the asset equity, if you're trading Microsoft options or Apple options, AMD, Tesla, Nvidia has been going wild. There's just so many things you could do. So, but always feel like you've done some type of diligence and you have a plan. Okay, it's gonna gap close to here. Once it gets to here, I'm ready to take profits. Or wane off the profits, like sell a few of your contracts and then keep some if it keeps running. If not, then you cut. Start with liquid options. Stick to options with high trading volume and liquidity that tend to have a tighter bid-ask spread. So because better opportunities for entry and exit, right? So it's because there's someone on the other side of your trade. When you're buying a call option, someone is selling a covered call to you at that premium on the other end, and there's someone bidding and asking. So when you buy a call option, you're setting a bid for what you're willing to pay for it. And if if you're bidding for $1, but the lowest ask is $1.20, you're not gonna get filled. So, but sometimes and you need to have volume. There needs to be people trading this. So, a higher market cap, a higher liquidity volume, and that will all be shown inside of Robinhood. And when you're studying this asset you're trying to trade, just feeling like you have an understanding will just make you feel more confident. And then when you're trading more confident, like with anything in life, it will most likely go better for you. Continuous learning. Options trading is a dynamic field. There's so many different ways, technical things to study. So commit to continuous learning, watching videos like this, market trends, keeping up to date, techniques. Find your own technique. Find the indicators that you feel like are most tightly correlated to the price of that asset and they're working. And just find your predictions. See where the market's going as a whole. SPY, these S&P 500 indexes, that is basically the market. So it's kind of like a tide where if SPY is insanely down, your asset is most likely not going to be crazy going against the market flow. So be conscious of it all and just keep studying. I believe in you, Turbo Money fam, and that's what we're here for.
Thank you for watching, Turbo Money fam.